This year, junk bonds just hit a record high number of issuances. Even Coinbase just issued their first junk bond. So, what are junk bonds and how do they work? Well, without junk bonds, Las Vegas would not exist. And when you invest in companies, we usually buy stocks, like Facebook, for example. And stocks means equity, as we have equity or ownership in a company. Now, when you lend money to a company or to a government, you invest in their debt, meaning bonds. Like this U.S. war bond, war savings bond from 1944. And the money you lent the U.S. government was used to fund World War II. The lowest risk bonds are usually in countries with a very good credit rating or a company with a good credit rating. And here's how it works. So S&P and Moody's, what they do is they rate bonds. So a AAA rated bond is a low risk investment, then AA, then A, then BBB, then BB, etc. And any bond you invest in that has a rating at or below BB is a higher risk speculative bond called a junk bond. Okay, and a junk bond, or the politically correct term for it, is high yield bond. Since junk bonds are risky, they have a higher return than safer bonds, but they're risky. And since this year, interest rates are so darn low, investors are not leaving any money in the banks. And what they're doing is they're investing in speculative stocks and junk bonds at a record rate. And a lot of companies want to grow, and their credit ratings are not that good. So what they do is they issue junk bonds. And once interest rates rise, and they will, junk bonds and speculative demand for stocks will decrease, of course. Now, the last thing I want to say on this topic is that investment bankers take companies public. And investment bankers, what they do is they create these SEC filings. Okay, they underwrite stocks. You'll never forget it now. They underwrite stocks to create these things. And investment bankers also do the same thing for bonds. Okay, they underwrite bonds. And the most important thing about underwriting a bond or preparing to sell it to the market is to figure out what the interest rate should be on that bond. And so the way they do that is they use something called the yield curve. Now, the yield curve tells us that the United States government interest rates are right here. Okay, the yield curve tells us what the rates are. And what I want you to do is just look for now, please, at the dark blue line at the top. Okay, because that's what interest rates were back in 2020, early 2020, before COVID was a widespread problem. And we could see here that the x-axis at the bottom there is time, and it starts at 1 month, then 2 months, then all the way up to 30 years on the right side here. And on the y-axis is the interest rate. So with the dark blue line, we see that short-term interest rates in early 2020 were about 1.6%. Then if you now look at the light blue line, on the bottom there, please. We see that by early 2021, rates were cut big time by the government to make sure that the economy functions given COVID. Now, investment bankers use the yield curve to price bonds for their clients, meaning companies that need to issue bonds as they need money. So a lower risk company like Microsoft can issue a bond with the help of an investment bank. And Microsoft's bonds are actually AAA rated, which is almost unheard of. And so what happened was Microsoft issued a bond at a rate of 1.55%, very low. Now, investment bankers just issued a $2 billion 10-year bond for Coinbase at around a rate of 3.5%. And this chart doesn't go that high, so let me just make it a little bit smaller there. But you can visualize up there that that's what Coinbase bonds are priced at, 3.5% roughly. And this Coinbase bond is well above the yield curve, as you can see. And it's above Microsoft's bond rate because Coinbase is more risky than Microsoft. And Coinbase rating is actually in junk bond territory at a rating of BB. And the fascinating thing about the $2 billion Coinbase bond issuance is that demand was so red hot that investors wanted to buy $7 billion worth of the bond, kind of like a hot oversubscribed IPO. And until the government raises interest rates, I think junk bond issuances will remain at an all-time high.